Welcome back. Wednesday morning here on Squawk Asia. We're back with Tai Hui Standard Chartered Bank. Also, Jim Rogers. Jim, let me get back to you. Earlier on this morning, we were talking to another expert about demand creation out of the Japan disaster, and he was talking, among other things, about rough rice and maybe a nice bid to the price there, because, I mean, a lot of the paddy fields have been salted over and aren't going to be active for some time. Japan, I know, has significant stocks of rice. Corn, soybeans, Tai Hui is a little bit worried about that. Do you like both of those softs, and do you think this disaster is going to be good for prices?
Absolutely. I'm sure it's going to be good for prices. You're now going to have people whittling down their reserves, and that means that the supply going forward is going to be in worse shape than it has been before. No, this is good for agriculture and good for many commodities. Not saying it's good for the world. I'm not saying it's good for Japan, but there's always, as you know, in Asia, we talk about opportunities out of disasters. Every disaster leads to some opportunities for some people who pay attention.
Okay, now, Jim, but, you know, when people are freaked out like they are, they do what they did yesterday. All constituents in the Nikkei were down. On Monday, people saw, you know, we're doing the optimist trade about the rebuilding, the thing you talked about, you know, something that they haven't been doing for 20 years in Japan. But that's somewhat lost. What happens, you know, in 36 minutes? What do you think the tone of the market adopts? Do we pick up on the construction? Do we realize that people are going to have to replace, you know, old caddies from the 80s and buy up TM Toyota and stuff like that? You're grinning, and I'm kind of wondering why. Well,
no, Bernie, I'm going to say to you, I'm the world's worst trader. I have no idea what to do in 36 minutes or even 36 hours. You can watch CNBC to find out things like that. I'm not a good trader. I'm hopeless. I own things and I'm short things. And I usually do it for the long period of time. I'm thinking about stepping in and buying rice. I'm thinking about stepping in and buying energy if it goes down further. I cannot think of anything that I'm thinking about selling because of what's going on. I'm looking for things to buy. I mean, agriculture in Japan may turn out to be a great place to invest as a result of all this. The government's in the process, before this happened, of trying to figure out a way to solve their agricultural problems. That's going to present opportunities for somebody.
Jim, I think you're being way too humble about your trading prowess there. Let's come back to Tai. You're also watching the agricultural story as well and assessing what this is going to mean. Where are the opportunities as you see it?
Well, I think in terms of rice, as you mentioned earlier, you know, we do know that there's a significant amount of stock in Japan, and therefore, you know, that's not a real concern. And also the fact is that we do see a pickup in yield across Asia. So even if Japan does have to import, at least temporarily, I think the impact on rice will be relatively muted. But corn, soya, not least, we are actually on a bit of a run for the past few months on the back of those commodities, and you're just adding a fresh, you know, positive factors on these commodities. So in that sense, I think, you know, there are still big question marks over the demand-supply dynamics of corn and soya, but for rice, at least for now, we are relatively optimistic.
You know, on the supply side, talking about disruptions, I mean, logistics is going to be a huge headache, I think, for Japanese corporates, especially the electronics companies. How much of this has been factored into this huge plunge we've seen? Nikkei is down, what, close to 20% already.
Well, I think the Nikkei, as well as the rest of Asia, yesterday you've seen quite a significant, well, correction to say the least. But I think, you know, it's been priced into a great extent the potential supply disruptions along with the electronic sector as well as other consumer durables as a result of the port closure in Japan, as well as the production disruption that you will see in the Japanese market. At the end of the day, you know, an electronic gadget in Asia today is made up of many components, and if you just miss one of them, you can't produce. So I think that is going to be a short-term concern, at least until we see production resume.
Is this, I mean, this may sound like a very cruel take, but I mean, whenever you hear about supply-side disruptions, you think price pressures to the upside.
Yeah.
Inflationary pressures. In Japan's case, could this actually be a good thing?
It depends. There's obviously good inflation, there's bad inflation. We think that in the case of Japan, we may see a stagflationary environment where you see growth being subdued and inflationary pressure picks up. So that may not be the type of inflation that the government desire. And meanwhile, if you look at the rest of Asia, it is still moving in good momentum. We think that a lot of the panic we see on Tuesday is really transiting from Monday. Market looking at fundamentals and connection between Asia and Japan, and then Tuesday is no longer just about economics but about environmental contagion, about spillover, about survival. So I think there's a big difference in the market sentiment between Monday and Tuesday.
Point taken.
Hey, Jim, Bernie again. Let's talk about replacement demand because, you know, when the week kicked off, we saw like some of the South Korean names gain while the Japanese, like, I don't know, technology, the famous names were crumbling. You know, where there might be, you know, disrupted output from this country, do you think the slack might be taken up for a while? And I know you're not a trader, but if you're not a 36-minute or 36-hour guy, certainly you're a 3 to 6 month guy.
Right. Well, yes, of course. If the Japanese car industry is going to stay closed, then people are going to buy cars somewhere, and they'll buy them wherever they can get them, whether it's from Germany or America or Korea, who knows. But again, unless the whole world is going to have a nuclear disaster, which I don't know, I suspect it's not, but unless it does, this is going to pass, Bernie. I'm old enough to have seen many things like this happen, and it has always been wise to step in and buy at somewhere along the line. So, yes, I would suspect even that if Toyota's going to open again, you know, all of these things are going to come back and produce again after the initial shock and the initial disaster.
You look 20 years younger than your age, and I'm not going to tell the viewers out there what your age is, Jim. Listen, Jim, you know what's going on in Tokyo here? They're clearing the shelves. I went down to the 7-Eleven in this building this office is located in, and there was nothing. I just wanted a sandwich, a quick meal without having to wait in line at a fast food place, and it was cleared out. And you got places like, you know, China and Hong Kong now saying they're going to test food for radioactivity. You're a big guy on agriculture. You love farming.
Yeah, no, I agree. This is going to cause a rundown of many stockpiles around the world, of many reserves, whether it's of oil or rice or whatever it happens to be. This is going to cause the ultimate supply-demand for real stuff, for commodities, raw materials, to be even better than it was going into this. And they're going to be spectacular opportunities. As I said before, the Japanese were already trying to do something to give incentives in agriculture. This is just going to make it even better, and especially if some of the shares have collapsed, my goodness, it's going to be a great opportunity.
We very much appreciate your time. Jim Rogers, thank you so much.